Hi there. I welcome you to this learning session on IFRS 15. In this video, we will have a discussion on the modified application of IFRS 15 or the modified approach of IFRS 15 on its adoption. Let's go. After the completion of this video, you will have an understanding about what is modified retrospective application of the IFRS. I will give you an example for that. The third, we will discuss regarding the practical experience. In the fourth part, we will understand the disclosure requirements related to the modified application of IFRS 15. So these are the four areas where we're gonna deal with this in this video. Now let's understand in the language of IFRS 15 what do we mean by modified retrospective application. So I'll go through the text ones. So entities that elect which means there are two options, as you know. The first is a full retrospective and the second one is a modified retrospective application. When they elect the modified retrospective method, will apply the standard retrospectively to only the most current period presented in the financial statements. The most current period. Generally, we take it as a date of the initial application, which means suppose we apply the standard on 1st January 2018. So the requirements for IFRS 15 will be applicable from 1st January 2018, and the IFRS 15 will be applied either, which means two options, either to all the contracts, either to all the contracts at the date of initial application, or only to the contract that are not completed. So as you've gone through my previous videos, I've defined what do we mean by completed contracts. So which means modified approach can be applicable either to all the contracts, all the contracts, or those contracts which are not yet completed on the initial date of application, that is 1st January 2018. I'm assuming you follow a calendar year. So this is the modified retrospective application. So I've already discussed an example, and I'm going to elaborate a bit more on this. So suppose 1/1/2018, it's your initial year of application. This is the timeline, 1st January 2018. So you have the option either on this date apply IFRS 15's requirement to all the contracts, to the contracts all the contracts that are there on 1st January 2018 with you, or you can apply only to contracts that are yet to be completed. Completed. Because we have already discussed what do we mean by completed contracts. I mean the seller has performed this obligation. So they can apply IFRS 15 as on this date to all the contracts which are yet to be completed. So this is what we call it as modified application of the IFRS 15, the adoption. Now we will discuss regarding some of the facts on IFRS 15. The comparative period in accordance with the IFRS, IAS 11 or IAS 18 and the related interpretation. What do we mean by this? We in under the IFRS, when we talk about IFRS, we generally prepare two statements for 2018 for two periods, for one statement at two periods, for 2018 and for 2017. And this is suppose we are performing statement of comprehensive income. Then in such a case, all the revenue figures under the 2018 segments are going to reflect IFRS 15, as we have the option under the modified approach to apply the contract from 1st January 2018. That is the first date of initial application. So which means all the figures represented here will be based on the legacy standard. Legacy standard, which means the old standard, that is IAS 18 and IAS 11 or IFRIC 12, sorry, IFRIC relating to your royalty points. So 2017 figures or the prior year figure will represent the old standard, and the current year figure or the initial date of application for the IFRS 15 will reflect the new revenue recognition standard. So this is the meaning of first line. In second line, we already discussed it can either apply to all the existing contracts or only to the completed contracts. And after the application of IFRS 15, we may come up with some adjustments. Adjustment comes because we are making changes in the accounting policy because we are making some changes in the accounting policy and which may lead to differences in the amount that are recorded, and that amount should be recorded based on the new standard. Suppose amount should have been recorded is 700,000, but the amount recorded is 650,000, which means 650,000. So there is a difference of $50,000. Sorry, there's a difference of $50,000 between 700,000 and 650,000. So this is what we call it as a catch-up adjustment. The adjustment that have come up due to the application of the new standard, difference between the amount that should have been recorded and the amount that is recorded, and this balance and this difference is required to be adjusted with the retained earnings. We have to adjust this balance with retained earnings as an opening adjustment. Suppose we need to recognize an asset to the tune of 50,000. Due to this, application, we have to recognize an asset to the tune of 50,000. The entry would be contract asset account debited 50,000 to retained earnings 50,000. So we need to make the adjustment in the retained earnings. The same could have been happened if the amount recorded is more than the amount should have been recorded. Then in such a case, retained earning would have a debit entry and a credit entry to the respective accounts. So this is we mean by catch-up adjustments. Now let's understand what do we mean by practical experience. Like practical experience, we know that there are some practical exceptions due to the application, and when we apply the modified approach to adoption of IFRS 15, we generally do not have any practical experience per se, as we have 4 practical experience when we apply the full retrospective approach. But here there is no practical exception apart from one exception that is provided in respect of the contract modifications. So which means that an entity can choose, they have the option to apply the expedient or apply the requirement of the contract with the customer, that is requirement of the IFRS 15 requirements, either to the period beginning of the earliest period presented. Like in the previous video, we discussed what this earliest period is, and if we are following the calendar year, the period will begin from 1st 2017, or the date of initial application. Suppose this is for the first one, and suppose we are following calendar year, this would be the example for this date, and this is the example for this date. So which means all the modification that we have made prior to this, all the contracts in which we make the modifications, we can apply the requirement of IFRS 15 from this date, or the option is available from 1st January 2018, which means all the modifications should be accounted for based on the new standard from 1st January 2018. So this is the practical expedient that is only provided in respect of the contract modifications, which means you can either account for the modifications all the from all the contract modification that will happen 1st January 2017 and later date, or they can choose from 1st January 2018, 17 and 18. Let's understand the disclosure requirement if we apply the modified approach to IFRS 15's adoption. So basically, the standard require two disclosures to be provided. They are not basically disclosures, they are primarily reconciliations. If I'm going to simplify the explanation, these are basically reconciliations that you need to provide, that what are the line items that are going to get affected by the application of IFRS 15, and you need to provide the amount as per the new standard, and the amount that could have been if we would have applied the old standard and as per the old standard. And there are some adjustment due to which there is a difference between the amount as per the new standard and as per the old standard, and for these adjustments you need to provide an explanation. Suppose the revenue balances should have been 800 million, and now the balance as per the old standard, sorry, the balance as per the new standard is 800 million, sorry, 800,000, and the balance as per the old standard could have been 750,000. So which means there is a difference of 50,000. This is the reconciliation variance, and you need to provide an explanation why we are arriving at a difference of 50,000 between the two standards application. So this is the whole discussion on the modified approach, and thanks a lot for watching these videos.